Hi, good morning. And today is Wednesday, October the 5th. The time right now in Singapore is 11:39 a.m. in the morning, and we are almost getting to midday. And just a recap of what happened over Wall Street last night. And the market continued to rebound and quite aggressive on that as well. Of course, we know the background for this rebound was basically a U-turn by the uh, Chancellor of the Exchequer regarding their tax cut. So now that he has decided to make a U-turn by abolishing the tax cut for those in the 45% tax cut. So basically, the market received this news as very positive. And of course, the week before, we know what happened, whereby when these tax cuts was announced, the market actually went into a tailspin, not only in UK equity, it was also affecting the UK gilt market, which is their bond market, as well as on the sterling pound. So basically, the attack was on these three major assets. And of course, now that he has do a policy U-turn, all these assets that were actually under heavy selling pressure has now basically rebounded, and it has rebounded quite significantly. So over the last 2 days, as far as the Dow Jones is concerned, from below 29,000, and now it's back above 30,000. Last night high was at 30,325, and it closed practically almost at the high of the day. So how far can this rebound extend? Because as far as the fundamentals are concerned, nothing much has really changed. So the market is now in that situation in which many investors are now thinking, oh, if the Bank of England can do a U-turn from quantitative tightening to quantitative easing, maybe the Federal Reserve will do the same thing. So basically, based on that belief, the market is now buying up US risky assets to the point whereby it could be overdone because it's not supported by any comment from the Federal Reserve officials as to whether they were going to do another BOE kind of activity from QT to QE. Highly unlikely. So this market is building up for another sell-off. So as far as I'm concerned, this is not a great level to take up a short position. As you can see, the prices are now below my ideal prices. I want to sell anything above 31,000, not anything below that. So obviously, those who have sold at very low prices below 29,000 now will be licking their wounds. That's why you can see there's a lot of short covering going on from those who believe that the Federal Reserve may do a BOE act, and for those, and of course also influenced by those who have sold at pretty low prices. Anything below 29,000 was considered very low. So now they are busy short covering, and then you also attract a lot of speculators into the market thinking that the Federal Reserve will also follow in the BOE footstep. So this is, in my opinion, pretty misguided. So let the market drift higher. It's more important to join the market on the dominant trend, which is down. I feel a lot safer if I'm selling rather than buying. Okay, of course, short term you can do counter trend, but to me, I think the risk reward doesn't make sense. Okay, I would rather join the major trend to see if I can position a short. Okay. In the S&P 500, again, the rebound was pretty sharp. From below 3,006, now it's back above 3,007, almost hitting 3,008 last night. The high traded was 3,791.9. So we can see that the market right now is also rebounding in about the same quantum as the Dow Jones Industrial Average. And immediately on a technical basis, we can see that there is an immediate barrier to higher prices with 3,900 points, which is a high traded on September 19. So whether the market can actually go beyond this level and close beyond this level remain to be seen, and I will obviously be very keenly observing this move here. Today, obviously, we're going to have another major event, which is the ADP numbers. ADP numbers is actually a prelude to the non-farm payroll on Friday. It is going to be a number that reflects that the employment situation is easing off. It will also be very much in line with what the Federal Reserve hope to achieve, which is demand destruction via higher interest rates. And if they see unemployment going up, I think they will believe that the policy is working and they may actually double down so long as they want to accelerate the taming of this inflation way before the midterm election in November. So we don't have a lot of time, and the Federal Reserve definitely do not have a lot of time to do this because the midterm election is fast catching up. They only have a couple of weeks left, and there is every likelihood that they will double down on their very hawkish view as far as interest rate is concerned. In the Nasdaq 100, we don't see such an aggressive rebound relative to the Dow Jones and S&P 500, purely because over the last 2 weeks, when the market was selling off, both the S&P 500 and the Dow actually declined a lot more than the Nikkei, than the Nasdaq 100. So as far as we are concerned, the rebound this time over the last 48 hours in the US equity market is not so severe in the Nasdaq 100. Okay, so again, market is now back to 11,600 from a low of just under 11,000. So in terms of magnitude, the Nasdaq 100 is not rebounding as fierce. Okay, immediately I think the price to beat will be 12,000. So if the market can close above 12,000, maybe we are in for maybe an extended rebound. Otherwise, maybe 12,000 is all that it can do. So we will have to monitor this situation over here. Over in Asia this morning, we can see that the Hang Seng, after closing for 2 days, now is rebounding and I think it's basically doing a catch up. Earlier on, when I checked, it was just marginally above 18,000. Now it's slight back below 18,000 at 17,983. But by and large, you can see that the market is basically trying to catch up on the last 48 hours of what we call a rebound on Wall Street. Okay. Shanghai Composite Index obviously is still closed because China is closed for 1 week of Golden Week holidays to celebrate their National Day. So there will be no updates on the Shanghai Composite. In the Nikkei, we can see that the market has also rebounded very, very sharply. Over 2 days, you can see the market from 25,621 now back is trying to flirt with 27,000. So as far as you're concerned now, market is already above at 27,216 this morning itself. So immediate barrier to higher prices will be 27,300. Again, this will be a level to watch. If the market cannot close above this, maybe you would invite repositioning of short sellers into the marketplace. Okay. In the FX market, dollar has basically taking a breather. Market has been very cautious trying to go back to 146 in the dollar yen. Remember last week, what happened was the Bank of Japan actually came in near the 146 level to intervene, and prices went out to 140.35, but that was only a 24 hours window. Now the market is basically back up to 144. So again, we are not sure whether speculators will be daring to push it beyond 146. I think the odds are pretty good because if I'm the BOJ seeing that my billions of dollars can only affect interest rate, the exchange rate for only 24 hours window, I may not decide to come in again at this level. Maybe I'll come in again at a much higher levels. Okay, what the higher levels entails, we do not know. But if you look back to 1998, okay, this is the high price at 147.67. This will be one barrier to watch. Beyond this will be much higher, 160.40. This is 1990 levels. We are looking at a price 30 years ago. So we can see that this dollar yen surge is by no means over. There's a very good chance it will continue to edge higher, maybe go all the way to 160 before at that level. When the BOJ do intervene, hopefully they can do it on a concerted basis, whereby they can get the Federal Reserve, the Bank of England, the other major central banks to come in to actually press down the dollar rate. If not, unilaterally on its own, I think the impact will be not so widely felt. As we can see, from 146 down to 140.30, the market only went down by a 24 hours window. Okay, sterling continued to recover. Again, we saw that the U-turn in fiscal policy in the UK has resulted in the unwinding of short position. We can see that the sterling from 103.60 bounced back to 114.90, and this is quite a bit of a rebound. But technically, we can see that this market is built for lower rates. So eventually, I think this, once the buying tail off, I think the momentum will basically favor another rundown in prices, and very good chance it will go down to $1 to parity for the first time in the history of the sterling pound relative to the dollar. Okay. The euro dollar also experienced a rebound, although not in the same magnitude as the sterling, went back to just under the parity level. Would it get higher? Possibly. Okay, maybe from 102 to 103.70, that will be a level to watch. If the market can go up above 102, the next level in which I think it will have difficulty will be 103.70 levels. That will be a much more comfortable level to reposition short. I'm basically still very bearish on both the sterling versus the dollar as well as the euro versus the dollar. Over in let's see, in precious metals, okay. In the spot gold itself, we also saw a rebound, a very sharp rebound, purely because the dollar has softened a little bit. Well, whenever the dollar is too strong, precious metal prices cannot go up because they are inversely correlated. And because the dollar has gone into a bit of a consolidation, it allows precious metal to actually rebound, and it has rebounded quite a fair bit from our low of $1,614, bounce back to 1,700, almost $30. And we can see that the market is now very cautious, because immediately we have this high here, 1,735, becoming the immediate barrier to higher prices. Even if it can exceed the next barrier will be 1,765. So we will have to watch how the gold market reacts. I think there is potential for the gold market to continue to go up, but I think a pullback will be healthy. If we can do a pullback or maybe 50%, that will be great level to position on the long side for another run up. Okay, but until then, I will just be monitoring. Okay. Silver market has been even more aggressive. You can see that the silver market has actually taken out last month's high. Even it has taken out 2 months high. The high traded in mid of August was at $20.88. Okay, now the market is already way beyond that at $21.24. Now, having said that, we can see that this market rebound from $17.55 has unfolded in a three-wave pattern, and it has more or less hit its target. And so at this current price, anything above 21,000 is less than ideal to chase the market. Allow the market to pull back. If there's a pullback in gold, maybe it will elicit a pullback also in the silver market, and maybe we can have a zigzag, or rather a double zigzag, 2 sets of 3-wave rebound to test the $22.45, which is this level over here, last seen on May 26. Okay, so I think there's a very good chance, but I think ideally we see another pullback before the market rally again. I think the basic for the run up in silver prices is definitely a lot more sustainable than compared to gold. Okay, so between the two, I would favor silver more than gold. Okay. Oil market also recovered, but not in the not very much, from $76.25. Last night high was almost at $87. The main key event to watch will be today. OPEC Plus is going to have a meeting in which they're going to discuss if they're going to cut production levels. If the production cut is more than what the market expects, then there will be the impetus for higher oil prices. Obviously, the US is not very keen on higher on any kind of production cut as far as OPEC is concerned. But I suppose OPEC right now is operating very independently from the US, and I think they will do what they want to do. And I think based on current situation, if I'm the seller of, I would love to sell at much higher prices. So it's logical. Okay. Then I think this market is geared up for higher prices. If the market can close above $90.19, which is the high traded here seen in mid of September, it's a very good chance it will go back to $100 per barrel. Very good chances. Okay, I'm still holding on to my basic long position. Like I told you guys, I have I scaling to buy at 3 levels. My lowest price was just under $77 per barrel. My highest price is $77.70. So right now I'm sitting very pretty on this position. Hopefully it can go to $100. I want to be able to hold on to this position, because you can see that overall from the market low or high of 130.50 cents at the height of the Ukraine, when Russia moved into Ukraine, you can see this market unfolds in a 3-wave pattern. And there's very strong likelihood that if this low at $76.25 can hold, we could possibly be positioned for another run up to challenge the year high at 130.50 cents. Okay, so I hope to be able to sit on to this position beyond the all-time high, not all-time high, the year's high of 130.50. Okay, this market is actually building to be I think is gearing up for higher prices. As far as cryptocurrency is concerned, we see a bit of a rebound. Let me go down to the 60 minutes to show you what's happening. Yeah, there's a bit of a rebound. We can see that the market is going back to test the September 27 high. Okay, it has already exceeded on that date itself, September 27, we have a high of 20,381. So the market basically has rebound back to 20,000 and above. But 20,000 has become, this level has been crisscrossed so many times, it has no more that psychological impact. Previously, the market said, okay, if it cross above 20,000, that is good for the bullish case. But like I said, it has gone above and come below, went up again. So it has crisscrossed these 20,000 levels too many times to be of any psychological impact. Okay, so the prices as of this morning, very early in the morning, was 20,469, and it looks like it may go even higher today. Immediate barrier here will be something like 20,700 to 21,300. This is a sensitive area as far as concerned, because this represents an equality move. Okay, so whether or not you think that is a good level to go into buy now, I probably would not want to do that. In fact, I have no position in crypto right now, and if the price become more favorable, and if the unfolding of prices tells me that there is something else at work, maybe I will reevaluate. At this current price, I am not having any position. As far as Ethereum is concerned, it was not able to go beyond the September 27 high. Remember, Bitcoin was already above the September 27 high, whereas Ethereum basically is still struggling. The high traded then was $1,401.70. The highest last night was $1,370.10. So we can see that there is still a bit of a gap between the Bitcoin prices and the Ethereum. Ethereum on a relative basis is not rising as much as Bitcoin. So do keep that in mind. The high even in the market can go beyond the September 27 high. It's likely to be kept below $1,405. Okay, this is the high here. Now, over and Ripple is basically consolidating ahead of this October 18. Now, October 18 is the date that most analysts believe that a verdict may be available between the legal lawsuit filed by the SEC against the Ripple Lab. And there is every indication as far as analysts is concerned that Ripple Lab has a very good case of winning this lawsuit. And if that's the case, it should underpin the price of the Ripple coin itself. Okay, so the market is now waiting, compressing. You can see the range has been getting smaller and smaller. I think the market is just gearing up for the verdict. If the verdict is positive, this thing is going to fly. Okay, so from now until October 18th, we still about 2 weeks to go. So it may be a little bit too early to make any move in this particular coin here. On the other coins, you can see Solana is also basically quite buoyant, but you can see the ranges are getting also compressed here. The highs are getting lower and lower, and the low are getting higher and higher. So we can see that this market right now is consolidating. So it could be gearing in for a very similar move relative to the Ripple Lab. Okay, so we can see the Ripple coin is also consolidating into a triangle like kind of pattern, and Solana looks like doing the same thing. Okay, Atom, which is the Moscow coin, the Cosmos coin, is also consolidating, not so much able to take out the previous high of October 28, September 28, high of $13.32. The market has so far went down to as low as $11.80, and the rebound back is not able to break the barrier above $13.32. So basically, it is still under consolidation with a heavy bias to the downside. What other coins? Binance coin seems to be doing well. Binance coin has actually recovered quite substantially. You can see that it is among all the coins, this is possibly the one of the most bullish relative over the last couple of days. You can see the market went up to as low as let me see what's the price here. The price is $266.30. The market has rallied back to just under $300. Now you can see that the market is right now in this bracket of prices in the dark green area. This area is $294.60 to $302. This is a bracket which I think is going to be telling us the market has actually hit its target, and it will take a lot more for the market to push beyond this level of $302.20. So if it can go beyond that and close beyond that, maybe we are looking at something else. And if it's not, then maybe this market is probably going to pull back. Okay, so do watch out. At the current level, it is no longer useful to go in on the long side. If you are a short-term trader, maybe you can take your chance to to see if you want to go opposite to counter trend. But I won't do that if I'm you, because this market is very, very firm. Okay, I think the rest of the points are basically very, very similar. And I will end my sharing today. I will come back to you tomorrow with another update on this short-term update. Right. Bye-bye and take care.